Hey everyone, welcome back to Corporate Decoder. Today we're diving into Roper Technologies' latest quarterly report. Get ready because we're going to uncover some financial twists and turns that might just make you question everything you thought you knew about how a company makes money. I'm just kidding, this is actually going to be a straightforward report about how Roper is doing. This quarter, it's a story of acquisition, software, and a whole lot of numbers. I'm going to break it down for you in simple terms so you can understand what's really going on. If you appreciate getting straight insights from corporate documents, make sure you're subscribed and join our Discord community. You will find the invite link in the description below. First, let's make sure we're on the right track. This is Roper Technologies' report for the first quarter of 2025, meaning it covers January, February, and March. It's a Form 10Q, which is a quarterly report companies have to file with the Securities and Exchange Commission, or SEC. Think of it as a checkup for the company's financial health. Alright, let's jump right into the money. The financials. These are the numbers that tell the real story. Roper brought in $1.88 billion, that's with a B, in revenue for the quarter. Last year during the same period, they made $1.68 billion, $68 billion, $68 billion, $68 billion. But it also cost money to make money. Their cost of sales, meaning all the expenses directly linked to providing those products and services, was $589 at least them, with a gross profit, which is revenue minus the cost of what they sell, of about $129 billion. Not bad at all. However, there are still bills to pay, like all the costs to run the company itself. Selling, general, and administrative expenses, which is how they name these kind of spendings, took a big bite at $767.9 million. Interest expense net was $62.9 million. This is the cost to service all of their debts. And finally, they had to pay income taxes, which added up to $86.9 million. After all those expenses, Roper's net earnings, or their profit after everything, was $331 they made during the same quarter last year. It might look bad at first, but don't worry, we will talk about the reasons that affected the results. Now everyone loves to check earnings per share. It tells you how much money the company makes per each share of stock. Roper's basic earnings per share was $3.08. This decrease mostly reflects a non-cash loss that they had on an equity investment. Moving to the balance sheet, we can check what the company owns and owes. First, cash and cash equivalents was $372.8 million. Think of this like their checking account. On the other side, accounts payable was $152.8 million. This is what they owe to other companies, their suppliers mostly. They also owe quite a bit in long-term debt, which came in at $6.5 billion. It's important to keep an eye on this number to see if they are managing their debt well. Finally, total stockholders' equity, which is the value of the company owned by the shareholders, was $19.22 billion, a solid number. Now let's zoom into the cash flow statement. This report shows how cash is moving in and out of the company. Roper's net earnings were $331. This is not the same as cash. Adjustments to net earnings included $9.1 million in depreciation and amortization of property, plant, and equipment, which is basically a way of accounting for the wearing down of assets like buildings and equipment. This is an expense, but it doesn't actually involve cash changing hands. They also had $204 million in amortization of intangible assets. Intangible assets are things like patents, trademarks, and brand names, which get written down over time. They were affected by their investments in other businesses, recording a loss of $44.4 million. Finally, they paid $29.1 million in income taxes. So after all of the adjustments, cash from operations was $528.70, add $7 million, a slight drop from the same period last year. This is the real cash the business is generating. Looking at how the company is spending, acquisitions of businesses, net of cash acquired, they spent $124.9 million. On the financing side, borrowings or payments under revolving line of credit net were negative $145 million. They paid down some of their credit line. They also paid $88.6 million in cash dividends to stockholders. This is how they reward their investors. Finally, Roper ended the period with $72.8 million cash and equivalents. Now let's check some of their recent business deals. Roper acquired Munilink, a cloud software provider for local governments, for $118 million. And just after the quarter ended in April, they bought Central Reach for a whopping $1.85 billion. Central Reach is a big player in software for autism therapy. Let's check compensation and important detail. Roper spent $38.8 at $20 with company stock. Goodwill is an accounting term that represents the intangible value of a company, such as its brand reputation or customer relationships acquired in a business purchase, the carrying value of goodwill by segment. Total goodwill at the end of the quarter was $19.4 billion, the vast majority of it being held by application software SX and $14.69 billion, and network software took 3.71 billion segments. Roper's subsidiary Power Plan Inc. settled a lawsuit for $24 million before taxes related to alleged anti-competitive practices. Here we can check how much each part of the company made during the last quarter. Application software. $1.806 billion EtuiNet network software, $375.9 million cop trace, $435.95 at $28 in dollars, and $1 million app technology enabled products, $48.7 million. Most of Roper's revenue is from recurring software billion, followed by product revenue, $29.8 million. And reoccurring software revenue, $229, all remaining revenues from non-recurring software. Lastly, here's some news about Roper's CEO. Our president and CEO, Neil Hun, adopted a trading plan to sell up to 30,000 stock options. This is a pre-arranged plan to sell stock over time. So what's the big picture here? Roper is spending more on acquisitions, generating decent cash and keeping costs relatively stable. They're active in buying other companies, especially in software. Despite some financial hiccups with equity investments, the overall outlook seems steady. The decrease in segment operating margins is likely due to higher production costs and strategic investment in new segments. Investors should watch for how well Roper manages these integrations to enhance its profitability. Alright, that's our breakdown of Roper Technologies' latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.